I always start on the monthly timeframes when I do analysis. So just gives me the bigger picture where the big banks are placing their trades, whether it's long or short. Because obviously, being a retail trader, we can't move the markets. We want sort of to be on the side of what the banks are doing, because they are what pushes the market up and down with their sort of 100 to 1,000 or whatever lot trades they do. Big orders they place that will move the markets. Like this move here, you and I can't influence something like this or even this. So we need to be on the side of the bank. So first of all, I look at the monthly, and when you're looking at the charts, the current candle is not closed, so it's not yet valid as such. You look at the previous one and the ones before that. So here we have a like a spinning top doji sort of candle, and that just means there's a lot of uncertainty, or surrounding the COVID stuff. There's a lot of uncertainty in the market, so that just means that they're not markets weren't pushed either way convincingly. But if you look at the general sort of flow of markets, it's been sort of coming down since February 2018. It's been coming down. So that's the monthly. Then we go to the weekly. With the weekly time frame, as you can see, a lot of uncertainty again. I did mention this in last week's video. As you see, they pushed the price up, then back down, and just they didn't know what way to go with the market. So with this one, you kind of have to take it as look at the overall trend, which is pretty much it's quite like it's pretty much a downtrend, but it's not really swinging as much. It's not making big swings like where it was. Let's say here you can see it's a high, low, lower high, lower low swinging here. Whereas where it is now, it's not really doing that as much. It's a bit more of a flat sort of grind lower. But we are still in the downtrend. We did have a bit of a break higher, but price did make a lower low once more. And if you don't know sort of what trends and higher highs and higher lows are, we do go through it in courses and videos and that. So it just means that it's a higher highs and higher lows is an uptrend. So if you want to take notes, it might be useful for you. And then lower lows and lower highs are downtrends, which means the market is looking to trend lower, and you want to be on the side of the trend usually. Once again, market's in downtrend. As you can see, it is sort of swinging lower on this time frame here. What I look at it as is the most recent swing. You can put a Fibonacci on it. So Fibonacci tool is something that I use for retracements and like pullbacks and extensions. It means you're looking for price to come back to a certain level before continuing in the original direction of the trend. So if we look here, we can see price made a swing lower. It broke this previous low here, so we know we're continuing in the downtrend, and it came back into around the 61.8. I think that, so we're looking for price to continue lower once more. And I did tell someone in the chat, I think before privately, that you want to look for Fibonacci lining up with support and resistance. So if we're looking for prices to move lower, you might want to go to the weekly and see where the levels to the downside are, the support and resistance, something around here. So then I'll just mark out this sort of region here as a potential target for our trades lower. This is quite a key level. As you can see, price didn't really break below it here, just traded around about this level here, but then big swing upwards. So this level has a lot of pending orders, or a lot of there's a huge imbalance in the buys and sells as price sort of shot up from this level. And if you remember, this is a weekly time frame, so this move here is a huge move. Okay, so that's the level looking for to the downside, judging off of the monthly and weekly. And then when you go to the daily, similar thing. So once again, we've got price making a low, lower high, and then looking for price to roll down lower. So there's not much you can see here. As you said, no, there's a lot of uncertainty in the market. There's not a lot we can see. So on the 4, I'll have to reach for this a bit quickly because the time is going to push on. I would have maybe a trend line here. Once you get a break and a pullback, you can have a nice exit, a nice entry, sorry, and then exit once again at the 104.72. Like that. Yeah. So once we get a break below here, we can use the risk reward tool. I think someone did ask me about that as well. So the risk reward tool, we have it something like maybe this will be a nice sort of swing trade. So swing trading is like trading that you hold the trades for a few days to a few weeks. A nice risk reward, 4-1. That you're risking sort of 1% in this case to make 4%, or if you're risking 2%, you want to make 8%, etc. That will be a lovely trade to have there. If you do want to day trade it, you will go into a lower time frame. See, okay, what do we have here? We can maybe mark out another trend line on this time frame. Similar sort of thing. Break below here. Stops. That's a bit. I would personally put my stops around about here. Once again, I would go for the first target being here, and then if we go back to the 4 hour and a daily, you can find, yeah, the next level is pretty much down here, and then once again the level we mentioned at 104.70. So euro, I'm looking for shorts, definitely looking for shorts. I don't see a reason to go long yet on euro dollar, unless you're doing maybe you're scalping, then you can do that, but I don't scalp personally. So we're gonna jump onto the next. No, we're gonna go into questions. So if anyone's got a question, please do ask it now. If you type it into the WhatsApp, I can answer it that way. Any questions we have as we're going, just type it into WhatsApp. I'll look at every few moments to answer. But yeah, so as we're typing, I'm going to keep going over this same chart again. So yeah, that's what we're looking for. And I like to look for breaks of trend lines. I like to look for reversal patterns like head and shoulders, double bottom, double tops, etc. So those things, that's what I like to look for. If it's a reversal, I mean, for double bottom and a head and shoulders, but usually I like to wait for it to break a key level of support or resistance before I do trade reversals. Can you set an alert? You can set an alert for a particular price. Let me if you got to here, I can press add alert. Add alert, you can say when it crosses this level at all, or if it's moving up towards this level, or you can set a lot of conditions on what you want it to alert you for. And you can do it every time or only once. You can set the exact price here. So yeah, you can set the expiration times or make it open-ended. I've got the pro version, so I get notifications on the app or via email. And I think if it's not the paid version, you can only do a few alerts. So yeah, you can do alerts. It does work, to be fair. If you're not sort of trading full-time or you're not always at your charts, if you can't always check your phone, then setting alerts does sort of help to know, like, okay, it's reaching my level of interest. Like, let me look at the charts now because it's alerted me. So yeah, that is something that you can do. I've never really, I think I've set alert a few times, but it's not something I usually do. I usually sort of just look at my phone because I do have TradingView on my phone. Any more questions before we move on to cable? But yeah, the paid version just means that I can do, for example, if I want to back test or test how the markets went last week, I can pretty much, let's say, go to the 4 hour. I can, where is it? Do replay. I can set it back to say, let's say I want to go back to there. Then I can say, okay, well, how did the markets play out? Go to a low time frame. This is the 2nd of April candle. I can go forward. I can skip forward candles. I can see how it played out. Let's say I wanted to short it here. And then I would see, okay, what would have happened if I wanted to short here? Because I've done my analysis, whatever. It looks like it's a good short from here. Let's play it and see what happens. Will it get back to my level? Nope. It just keeps going lower. So yeah, you can do that sort of thing. You can have more things on the chart. But as a beginner, I recommend just keep sticking to the free version for now until you learn how to actually to navigate the markets as well as just the charts as well, because you need to know what to trade, when to trade, what time frames you want to use, etc. How to manage risk before you focus on the little extras that come with the pro version. Any more questions before I move on? I think if you type it, if I move on and you type it, I'll go back if at the end if needs be. So let me just quickly go on to cable. Let me stop that. Yeah, okay. So once again, I always start at the monthly. If it's a new month, I'll start at monthly. If it's not, then I know what the monthly is saying to me, so then I can just go to the weekly. Yeah, so also another pointer is if I'm doing analysis, every week I'll look at the weekly, every month I'll look at the monthly, and then every day, obviously the candle closes at 10 p.m. because it's based on New York closed candles, which is basically when the New York market closes at 10 p.m., that's when a new daily candle does start. Yeah, once again, so this is the monthly. So for cable, a huge spike below a key level here. This means that the price is likely to go higher. So as you can see, a huge spike, and then price is hanging around this level here. But it has been trending lower. So as you can see, if I get the where's the tool I'm looking for? I can't remember to find that tool. There's a drawing tool I can use. It's moving from high to low to lower low to lower high to lower low. So look at the down. It's looking like a downtrend on the monthly. On the weekly, it's a similar thing. It's trending lower. It's trending lower. It did, although, come back from this level, but it's in a downtrend. So this is a quick look over on the weekly and the monthly and the daily. If you put Fibonacci, I always like to do, or put Fibonacci on my charts. If it lines up with a level, I don't just put it on sort of blindly. I look for levels. Does it line up with a level? This level here was a level from years ago that I remember. So I personally wait for it to come back up towards this level before I look to short. So yeah, level. So I think it's blinded the level. Visibility. Okay, cool. Right. So up to here. So basically, you want the price to come up to this level roughly, and then look to get short. So because we're in a downtrend, I'm not going to take any buy trades if I'm not very experienced in trading, and also if I don't trade cable quite a lot, because pairs, they have a lot of pairs, or all pairs actually move differently. They don't all move the same. There's small sort of intricacies that each pair will do that you'll know if you trade them regularly, that this is how cable moves. You know, a pair like dollar CAD sometimes moves erratically. It doesn't always respect key levels. It will move through it quite a lot, then bounce back. A level like euro yen does sort of behave more so, but it does move a lot. It does move a lot, but it does behave. So, you know, certain things you'll find in pairs, and you'll know how to trade it. So I will wait for cable to come up to here, and then I'll look to have maybe a risk reward of, to be safe, you should, well, as you sort of begin to trade, put a stop loss around here. First target is here. Second target, we'll look at the Fibonacci's in a sec. But I know that if I go down to 4 hour, I can find a better target or a better level of to put my stop loss. I'd probably put it around here, so just behind the level, this level of Fibonacci, and also there's a little bit of sort of something here, a level around here. So to cover myself, I just put it above it as well. That's a nice 5-to-1 risk reward. Also, guys, if you do have more questions, keep typing the questions. Oh, Daryl, Fibonacci. Okay, Fibonacci. So basically, with Fibonacci, what you're looking to do is, if price is swinging like down like this, or swinging up like here, you put Fibonacci on to it predicts. It's a mathematical equation that predicts. To explain it, basically, there's a law or a rule that, or theory, I should say, that price should retrace or move back down at least a third of the way to 2/3 of the way before it continues in the normal trend. So it's basically, the market's saying that it should come up to one of these 3 levels and then bounce towards one of the extension levels. So my price swings up, as it's sort of coming towards this point here, you put Fibonacci on. So when you see it coming down, put your Fibonacci on to give you the levels of these 3 blue levels. But what you're looking for is for price to, for the Fibonacci to line up with your support and resistance. You're looking for confluence. This is like a level of support here. So you're thinking, okay, this is a key level here. This would have been somewhere I'd have placed maybe an order, a limit order for price to come up. I probably would have been stopped out if I didn't have my stop loss quite wide. So I probably would have placed it maybe here, targets up here, stop loss maybe. I usually put it there, to be honest. I would have stopped out just. But if when you're starting out, you want to be safe and put it sort of behind the red line. That's why I've got my red line there. That's where the stop loss should be. If you look for more confluence or other levels, so in here, it's a little bit of a level around here. So if you look at it, that level held quite nicely, very, very nicely, in fact. So if I was doing a full analysis, that level will be plotted out, and then I have to make a decision. Do I want to sort of rely on this swing, or do I want to go with this level of support? Usually what you should do is go to level of support. I marked this out here because it was a point of swing, but support and resistance do they are stronger than swing points. So realistically, trade should be where I buy it around this level here, the blue line, stop loss around the yellow line, so the red line here, maybe a few pips below it, and then your targets can be, first target is always usually the 0 point in the Fibonacci, the first point, then, or the high. Then the second level of target is the D1, or they call it the 27.2 extension, and then the third target here. And as you can see on the chart, it got past the final target a few pips and then shot down. So it does work quite well, I find. But also it works the best when you have it with confluence of support and resistance. Okay, so where was I? Yeah, so here, hope that explains it, Daryl. Yeah, so here, this is the level of resistance. Wait for price to come back here. First target, second target, third, if they do line up with a level of support. So first target would be there. Let me look for levels. Because of these levels are sort of unseen levels for cable, you can't really predict where it will go short to. So how I would trade it is, you would keep trading it lower, but you would have what's called a trailing stop loss. So your stop loss, you want to have it moving up, also moving down in the way of the trade, to protect yourself against any big swings or any reversals in the opposite direction. So once it gets past here, my take profit would always be down here, but I will look to take some profit off at this first level, this second level, and then this, I'll take my final profits, or maybe leave maybe 10-20% to let it run to see how far it can go, but then put my stop loss here. So stop loss is not always to protect you against a loss. It can protect you against losing profits. So if you in the profit here and you put the stop loss here, it means that when price comes to here, you get stopped out for that profit, meaning you won't go into a lower amount of profit for that trade. Okay, so I hope that all makes sense. Confluence, confluence refers to when multiple analysis line up. So if I have Fibonacci, which is this, let me clear my charts. So if you have Fibonacci, which is what I just had here, lines up with support and resistance. So when Fibonacci lines up with support and resistance, that's called confluence. That's all it means. It means that when you have one or two or three, sorry, 2, 3 or 4, or just 2 or more sort of analysis that line up to give you the same idea or the same bias, then that is what's called confluence. And the more confluence you have, the more probability your trade has of being successful. So trades is about probability and numbers. You want to have everything on your side. Other things of confluence can be candle sort of patterns. It can be reversal patterns, or sort of breaks in trend lines. It can be the news. So if the news, let's say like right now, they announced that the UK is going to increase their interest rates, that is what's bullish, or make the pound stronger. So this, that's not confluence for a short in this trade. But if you had a long bias, and you had a long bias with Fibonacci, and you had a nice double bottom, so basically price saying that it's going to go higher, and then also they said that they're going to raise the rates, that's all a good sort of confluence for your trade to take that long, basically. So you always want to have multiple confluences for your trades to increase probability. Okay, so as I said before, shorts, I'm looking for shorts once it gets to around this level here for cable. It is quite a way away, because that we're at 124 sort of 55 now. So if you're advanced in trading, you can look to trade this higher up to this level. So maybe you saw a trend line maybe here, something like that. When price comes back to here, you might take a long up to this level. Let me go to the 1 hour, because it looks right. So I always recommend to people when they're starting out, stick to the 4 hour and above, just because when you get to these sort of lower levels, it can get difficult to, or get a lot, basically it gets a lot for you to sort of manage. So price hasn't quite broken above this level yet, but I can maybe look to take a trade around this level here. So there's this level of support, this trend line level of support. If price can come back to, ideally, would be here, ideally right here. So maybe grind slowly down to here. That will be the perfect trade. But if not, anywhere in and around here, your stop loss then has to just be behind this level here. So behind the yellow line, in sort of a good level. You don't want to put it too close because like here, price came back to this level here, nice bounce, but here it went a bit lower. So that should be there. It went a bit lower and then moved up. So you want to have your stop loss around about here where it is now, enter around there, and then look to trade it higher up into the level I mentioned. So around about anywhere in here will be fine, maybe 127.50. Price does usually like round numbers. And then, yeah, so that's it's a huge risk reward to be fair, but you might take profits off as it's moving up. So you're not going to necessarily get the full 7 to 1. But nonetheless, you will profit as long as it does take a nice bounce from here, and then you manage your trade accordingly. So, like when I do my YouTube videos, I do say this will have a short-term bias of a long, but in the medium and long term, it has a down sort of a bearish bias. Sorry. So yeah. Right. Finally, yeah, because the time. I don't think we'll get through to dollar Swiss, but we will go through euro. I think it was euro yen. Let me check again. Sterling yen, pound yen. Cool. So monthly, quick look at the monthly. Similar thing to cable. It went just below a key level here. So price looking to move higher a little bit before it does. It is in a downtrend. You've got a high here, a low, lower high, lower low, lower high again, just on the lower low. So it's in a downtrend on the monthly. Weekly is same thing, downtrend again. I really want to find that drawing tool to make it. Yeah, here it is. So price is making swings like that. So yeah, basically what I just marked out, the peaks are the highs, the troughs are the lows, or the lows pretty much as it's called, and it's making lower lows. So the low here is lower than this low here is lower than the previous low, this low is lower than the previous low, this low is lower than the previous low, and so on. And the same with the highs. So you see that, you know, that the price is in a downtrend. I want to clear that off. Just want to delete. Cool. Downtrend again. Key level is here. So I've got, what we're doing now is, got another question. Do you have to be really good at maths stats in order to succeed in trading? No, you don't. With stats and maths and that, it helps if you know a bit of stats, if you can like work up probabilities and that, but that's if you want to be sort of advanced and you like doing that sort of stuff. You don't have to. I don't sort of do I don't really do or look at stats in my trading, but I do with maths. You can just use a calculator or a lot size calculator to calculate your lot sizes, and if you want to calculate all the monies and percentages, use a normal calculator. So you don't have to be good at maths at all. Daily time frame, once again, it's a Fibonacci play. Let's zoom out and see what we have. What I find is if you can't find a level, if you look at this sort of time frame, go to the next time frame up and see, okay, what can I find if I look at this time frame? So it's not always clear, but you have to look for sort of the key things. Don't always look too far back. Look at the most recent levels if you can't find anything across the whole big picture. You can see that price has bounced nicely off this level here, 1, 2, 3, and around here again. So this is a nice level. I don't want to mark out every single level because we haven't got enough time. We've got about another 7 minutes or 4 minutes, in fact. Okay, you know, it says that Zoom have removed the limit for our meeting. That's quite nice of them. Okay, cool. We can go on with this pair and the next pair. Right. So, yeah, I'll look for price to come up to this level. Once again, shorts looking for, you know, the pound is looking quite weak amidst of what's happening with coronavirus. So you're looking for shorts on this. And also when you look at the yen, the yen being strong during uncertain times means that this pair is going to go lower. So we're looking for this. Ultimately, the pound is stronger. So the pound is weaker and the yen is stronger. So for this pair, everything's pointing down. which is why I would always advise not to trade this higher unless you are advanced and very experienced in trading. But nonetheless, shortly from here, first target, as I said before, the first point in the Fibonacci, second target and third. It's always hard to look for anything below here because, as I said before, these pairs haven't been down to these levels in either a long time or they've never been down to these levels. So pretty much you should pretty much mark it there like that. So think of the levels of support and resistance as areas, not necessarily lines. So you can mark, what I used to do on my charts, I used to mark out, or even do now, mark out areas, not just lines, because price can reach a line and then go through it a bit, but then bounce back, or just touch the line, or just go a little bit before the line and bounce. You don't want to think of it as the trade should be perfect. It should touch the line. No, it can just go to the area and then move upwards. So that will be, if I go down to the, so it lines up nicely with my first level of extension. So that will probably be my main target. And then so this level, I'll look to take off most of my profits and let things run down to here, maybe 10 or 20% of the trade run down to the level at 110.60. So yeah, once again, the bias is short for sterling yen. But if we go down to the daily and the daily and the 4 hour, if you do want to trade it up to here, there's a space of around quite a lot of pips, to be fair. So then I will maybe go down to the 4 hour, 1 hour, see what I can find. Let's delete that. I'm not seeing a lot of reasons to long this, to be honest. It's not the cleanest of moves up. And when that happens, it means that price is just struggling to move higher. So I wouldn't really then trade this higher, especially because it's struggling. Yeah, I wouldn't sort of touch this higher because you can see here it's not really sort of trending on this lower time frame higher, or it's not really moving up with ease. It's sort of coming to the level here, come back down, come to level again, come back down, break above it, come back down. It's not really, I'm not really clear that I'm seeing on the low time frame that this can move higher with ease. So I just wait for it to show that, a big move up, pull back to a level. Maybe this level will be nice for me here. What was here was support turned into resistance. This level will be nice if it breaks above it quite cleanly. Let me get the drawing tool out again. I can never find it. Yeah, if it breaks above this nicely, pulls back quite nicely, then I can look to take longs up to the levels we mentioned. Oops. This thing's annoying me. Yeah, so up to levels we mentioned before. Yeah, then I look to sort of long it up to this level here, then take shorts from here. So that will give us, it was pretty much this level here, so 141. So from this level here to 141 is a nice amount of pips. You can make a good trade if it does sort of do what I've just said it would do. Stop loss maybe around there. So yeah, 2.7 to 1. So there's a nice sort of trade there you could have. Questions. Bullish means the price is looking to move higher. It is strengthening this currency pair, or the currency pair is looking to move higher. It's the bias of this currency pair is higher. Yeah, that's what bullish means. And bearish is the opposite. Bearish trend, it means it's trending lower. It's looking to move lower. Price is looking weak, or the currency pair is looking quite weak. And yeah, so that was answer that for you in the chat. But yeah, so that's that pair, and we'll quickly go over. We're going to go over dollar Swiss. Any more questions, guys, or ask? Because after this pair, it's a short Q&A for around 5-10 minutes, and then we'll finish in 4.